Welcome back to Roxom TV and thanks for joining us today. I'm your host, Jamie. We have a busy show today with several big global stories that markets are actively reacting to. We will start with Venezuela, where political prisoners are now being released following direct US intervention, a major signal that pressure is reshaping the country's political landscape. We'll also look at Wall Street's reaction to Donald Trump's surprise comments on capping the credit card interest rate, a move that's already rattling banks and sparked a lot of debate about consumer relief versus economic risk. On top of that, we'll break down the escalating takeover battle in Hollywood as Paramount sues Warner Brothers in a fight that could reshape the future of the media and streaming industry. We'll also cover where crypto regulation stands in the US as the Clarity Act hits delays at a critical moment. And we will touch on how Bitcoin culture continues to creep into the mainstream, even showing up at the Golden Globes. But before we get into all of that news, as always, we're going to start with the market. So let's take a look at Bitcoin's charts and the latest technical setup and see where price is holding and where the key levels are and what the data is telling us right now. Then we'll move straight into the news and break down what all this means of the in the market going forward. So anyways, we're starting with the daily chart. One thing is very nice about the short term. So we always start with the short term. And so that means the daily. And then we're going to jump to a higher time frame. We're going to take a look at the weekly charts of Bitcoin as well. Because like separating into daily and weekly, it kind of separates into a investing. So investing is more like a long-term mentality, whereas daily is more for the trading side of things for a quick flip if you guys are into trading like I do. Anyways, for the daily shorter time frame, I'm liking this. I'm liking the setup because I have spotted this ascending triangle days ago. The reason why this is a bullish setup is because this is actually a bullish pattern, and how you could kind of like predict or could possibly see where the major resistance Bitcoin would hit is around like 105K, somewhere around that. How we could take this is basically we take the width of the ascending triangle, go to the breakout point, and then we see where is the possibly most likely Bitcoin will find its resistance. So right now it's about 105K since this is a bullish setup. So that means on the daily time frame, that means on the shorter time frame that this is a, well, if you guys are into trading, then we could flip a quick buck. At least this is what I'm personally doing, not financial advice. I'm just telling you what the charts have been telling me. That's all. Okay. So yesterday, Bitcoin did quite something really nice because we pumped all the way to 96K, which is a level we haven't seen since like 17th of November or 16th of November. So it has been quite some time. Of course, crypto Twitter, people went over the moon saying that, okay, maybe this is not a bear market after all. But as I like to separate into daily time frame and weekly time frame, and what I witness for the analysts out there, some people don't think this is a ascending triangle. What they think is that this is a kind of a bear flag insert. So if you, for those of you who don't know what a bear flag is, there you go. This is what it looks like. So like it is quite difficult to differentiate whether this is a ascending triangle that I drew here or it's just like a bear flag. So price just keep bouncing off that resistance line. But like the reason why I think a ascending triangle is more likely in this situation is because we have to jump onto the weekly time frame right now. So daily, this is a bullish setup. Maybe we're going to find resistance at 105K. And the reason why, zooming out on a longer time frame, So now we are on the weekly right now. The reason why I still think this is a bear market and why I managed to call this rather early, like earlier than most of the analysts you could see, is because if we bring out the Ichimoku cloud, we are essentially just like trading inside this cloud. So last time when we were trading inside the cloud, we were staying inside consolidating for three or to less 4 months, something like that. If three, okay, it's repeat, but often. So if he rhyme, we way to 5K bear market. Break it to you, like this is just following exact as 2 months ago or 3 months ago, like because following the 4-year cycle, we 120 of October. So my mic is cracking. Like, is the audio fine? I've just got the feedback from the live chat. I'm sure the team is looking into that. So bear with us. And I was talking about what I was talking about the weekly and zooming out. This is a second stage of the bear market we're entering, because like if we follow pattern, this is the first stage. We managed to find a cycle top at around 69K. That was all the way back in early November 2021. And then this is the first stage of the bear market. The second stage is that we're going to have a rally. And this, it does, it's just a dead cat bounce. This happened to be a second stage of the bear market. And it looks we see right now. And once if we zoom closer, sorry about the drawing, let me remove all the drawing. So if we zoom closer to what actually happened back in March 2022, so this is already a bear market. Of course, we only knew that in hindsight. So we managed to pump all the way up to 46K. So people, again, on crypto Twitter, people were over the moon, but until like only we know in hindsight that this is just a dead cat bounce, a relief rally. Because zooming out to any previous cycle, the reason why I love Ichimoku Cloud so much is because that it is a leading indicator. So it kind of tells you, it kind of cuts through the noise and tells you whether this is still a bullish trend or a bearish trend. Because last time during the bear cycle in 2018, we went below the Ichimoku cloud. Like we didn't stay inside this cloud for a very long time, actually a rather short amount of time, but that's okay. And we went below the Ichimoku cloud, and we have the Ichimoku twist right here. This is again a bearish setup. And what I'm seeing right now is basically aligned with the daily that I was giving out. So the shorter time frame, yes, I mean, on the daily chart, it does look pretty good. Like we're going to pump all the way up to 105K. Maybe we're going to find resistance there. But like I have my doubt if we manage to actually close above 105K, like very likely based on the daily and weekly, what the chart are screaming out to me is that we're going to find resistance at around those critical level 105K before heading straight to the third stage of the bear market. So here is the first one, and then right now we're experiencing the second one. Before maybe in mid-February, we're going to head to the third stage of the bear market. But like that being said, a relief rally is still very much possible, still very much on the table. It's just I'm watching 105K very closely. The reason why I'll say this is that so far, okay, first month of 2026 is doing rather well. Like we got a positive 8% return The reason why is because like I like studying the pattern of Bitcoin's return. So starting from October 2025, we had 3 consecutive red months. History doesn't repeat, but it often rhymes. Like usually when we have 3 consecutive red months, this has happened like 6 times in the entire Bitcoin history. So usually 3 red months, we're gonna end up having a green month after the 3 consecutive red months. So maybe we're gonna see that this month in January. Right now, it's still mid-January, so I don't know how it plays out. But like, if it happens to somewhat trying to follow the pattern, then this is a reference we could take a look at. We could bear in mind and maybe possibly pull some trades in. So anyways, that was the basically a very quick rundown of where Bitcoin is possibly going to. Let's move on to the news. Like first piece of news we have to cover. Venezuela has begun releasing political prisoners, and this comes just days after direct US military intervention. This is one of the first concrete changes we have seen on the ground since the US raid in Caracas earlier this month. And while the numbers are disputed, the message is pretty clear. Pressure is working, at least partially. So, just to recap a little bit, on 3rd of January, the US Special Forces carried out a high profile operation in Caracas. That raid resulted in the capture of Maduro and his wife, Celia Flores. They were flown to the US and now face federal charges, including narco terrorism, cocaine trafficking conspiracies, and weapons related offenses. Maduro has already appeared in a New York federal court and pled not guilty. So, after Maduro's being removed, his vice president, Delcy Rodriguez, was sworn in as a interim president. She's still seen as part of the old power structure, but under intense US pressure, her interim government made a key announcement. So on 8th of January, officials said Venezuela would begin releasing a significant number of political prisoners as a goodwill gesture and as part of talks with Washington, D.C. So what we know about the prisoner release so far. So here is the numbers. The Venezuelan government claims 116 prisoners have been released so far. However, independent human rights groups, they tell a different story. So the right groups say they've only been able to verify around 40 to 50 releases at first, rising to roughly 60 plus as of mid-January. So the gap exists because the government has not published full names of those prisoners. Some detainees may not qualify as political prisoners, and families are still waiting for confirmation. For context, the right groups estimate Venezuela still holds about 800 to 1,200 political prisoners. So this is progress, but very limited progress. So outside Venezuela prisons, families have been gathering for days. Some are sleeping outside facilities, others are demanding proof that loved ones are alive. As for Donald Trump, of course, he's going to take credit and send a warning. Donald Trump has openly claimed credit and on Truth Social, his very own social media. So he said that Venezuela was releasing prisoners in a big way. Thank you. I hope those prisoners will remember how lucky they got that the US came along and did what had to be done. I hope they never forget. If they do, it will not be good for them. Thank you for your attention to this matter, President DJT. So he also suggested that these releases help avoid a second wave of a military action. That matters because it signals leverage is still being used. So And other key figure we want to look at is Maria Corina Machado. She's been one of the most vocal advocates for political prisoners for years. Many of the detainees are her allies. She's now preparing for or has just completed a high profile visit to the White House. She's expected to thank Donald Trump for the intervention, push for broader prisoner releases, and advocate for a democratic transition. However, there's still tension. Donald Trump has elevated Delcy Rodriguez as the interim leader while stopping short of fully backing herself, Machado. That creates uncertainty over who Washington ultimately supports in a post-Maduro Venezuela. So this story actually goes way beyond just Venezuela. Maduro is closely aligned with Russia, with China, and Iran. So his removal has weakened that network. What analysts are saying is that it exposed cracks in Russia's global allies. It highlighted US military reach, and it sent out as a warning to other authoritarian regimes. Can't speak today. Moscow condemned the raid, but so far its response have been restrained. That alone is being closely watched. So, final key takeaway for this news, let's be clear. The release of political prisoners is real, but still limited. Hundreds remain detained, and Venezuela's political future is still deeply uncertain. So we'll continue to track every development right here on Roxom TV. So we will take a short break for now, and coming back, we're also going to dive into the announcement that Donald Trump broke about the credit card rate cap. So stay with us.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
He's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you, don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Banks and markets. Over the weekend, Donald Trump posted on Truth Social calling for 1-year cap on credit card interest rates at 10%. Right now, the average credit card APR in the US is closer to 23 or to 25%, and that gap is exactly why this caught everyone off guard. So, what Trump actually said is that he framed the idea as consumer protection. He said Americans are getting ripped off by banks, charging extremely high interest rates, while households are already under pressure. So, there are no details yet, no bill, no executive order, no clear path on how this would even be enforced. Like, in fact, this is just like if we go to the screen, this is more like a post from Donald Trump himself on Truth Social. So maybe we could show the screen a little bit, the team. So at this stage, it's more of a political signal than a formal policy. But even signaling it was enough to move the market. The reaction from banks, it was so fast and also very, very negative. So here we have JP Morgan said Trump's credit card cap would hurt consumers and the economy. So shares of major credit card issuers dropped between 2 to 5% in a single session. That wiped out billions of dollars in market share almost instantly. Banking groups warned the idea could be devastating, saying a hard cap, it could make credit card lending unprofitable. It could also reduce access to credit, eliminate rewards or cashback programs, and slow economic activity. Executives at major banks openly push back, arguing that low income and higher risk borrowers would hurt the most. So let's take a step back. Why is Trump pushing this right now? So the US household credit card debt is now over $1.2 trillion, the highest on record. At the same time, borrowing costs remain elevated after years of Fed rate hikes. What Donald Trump has been messaging this as banks borrow cheap but charge families 25 to 30%. And the 10%, that number is symbolic, not so much technical. It sounds tough on Wall Street and friendly to consumers to their ears, and politically it pulls quite well because it helped with the vote. Because timing matters here. The 2026 midterms are coming up in November. Republicans hold slim majorities in Congress. Polling suggests 70 to 80% of Americans support caps on credit card interest, especially independents and lower income voters. So even if this never becomes law, it helps Donald Trump frame himself as anti-bank, shift attention to affordability, and energize voters who feel squeezed by debt. But it also creates tension inside his own party, where many lawmakers are warning about unintended consequences. So, will this actually help with inflation? People are asking. Well, here's an important distinction. Capping credit card rates does not lower inflation directly. Prices don't suddenly fall, but it can change how inflation feels. Americans pay roughly 150 to 200 billion dollars a year in credit card interest alone. So lower interest costs would free up cash and reduce financial stress. So it's more like a psychological relief to boost confidence, even if grocery and rent prices stay high. So why most economists and analysts are very skeptical around this news, and why all the banks are so serious and basically rally against this news. Most analysts argue price controls come with trade-offs. So banks may cut credit limits, riskier borrowers could lose access entirely, rewards program would shrink or maybe even disappear, and fees could rise in other areas. There's also a legal reality. A cap like this, let's go back to the news. So a cap like this would almost certainly require Congress. And even some Republicans are already signaling resistance. So the final takeaway here is that the idea is politically powerful, but economically risky. For consumers, they might have an illusion that this would actually help lower inflation. For banks, it actually threatens the profit. Right now, this looks more like a campaign positioning than an actual policy being placed. But as what we've seen before, markets don't wait for laws; they react to signals, to instant news like this. And this signal was loud enough to shake Wall Street. Of course, we will keep watching whether this stays a talking point or turns into a real legislative fight. All right, moving on to another news. Paramount is now suing Warner Brothers, and this isn't a legal fight only. This is a high-stakes takeover battle for one of Hollywood's most valuable media empires. We are talking about Warner Brothers Discovery, so the owner of Warner Brothers Pictures, HBO, DC Comics, Harry Potter, and CNN. And right now, the company is under pressure, carrying roughly $40 billion in debt after its 2022 merger. That pressure has turned Warner Brothers Discovery into a takeover target, and now two different bidders are fighting for it. On one side, you have Netflix. On the other side, you have Paramount's Skydance, the company formed after Paramount merged with Skydance Media in 2025. Netflix was actually the one who pulled the first move. And late last year, Netflix agreed to buy Warner Brothers' core studios, film, TV libraries, and a Max streaming platform in a deal worth around $83 billion with a mix of cash and stock. That deal values Warner Brothers shares at roughly $28 each. Here's the key detail. Netflix does not want the old cable networks, things like CNN or TNT. Those would be spun off into a separate company called Global Networks. And as for Paramount, of course, they fire back with more cash. Paramount did not like that. So in December, Paramount launched a hostile counter offer and all cash bid for the entire company at $30 per share, valuing the deal at around $109 billion. That's roughly $18 billion more upfront than Netflix offer. And Paramount, what they say about the deal is pretty simple, like basically more cash for Warner Brothers, faster closing, and no risky cable spin off. And they argue the cable business Netflix wants to spin off is basically worthless. So what Warner Brothers is doing right now, like basically they keep saying no to Paramount. And despite the higher price, Warner Brothers board has rejected Paramount multiple times. The reason why they would do this is actually in plain English, they don't trust the money from Paramount. Paramount's offer depends on massive debt financing, a large equity backstop from Larry Ellison through a trust that can be revoked, and there's no bidding merger agreement. So Warner Brothers board said the bid looks good on paper, but it could fall apart in real life. So this is the price of Warner Brothers, the stock, how it is doing. And the past 5 days is actually doing pretty good about the news because everyone is trying to take over and offer a better deal to Warner Brothers. So the past 5 days performance, they pumped 1.37%, which is pretty good. And by contrast, for Netflix, why Warner Brothers might prevent Netflix is that Netflix, they have a $400 billion market cap, a much stronger free cash flow, investment grade credit, and a clear regulatory strategy. So from the board's view of Warner Brothers, Netflix offers certainty even if the headline prices might be lower. And here comes another bidding. So Netflix preparing all cash offer for Warner Brothers to fend off Paramount. So these two giants are fighting. However, a lawsuit is coming from Paramount's side on 12th of January. Paramount Skydance sued Warner Brothers and its board. What they want is that they want transparency. Paramount right now is demanding for detailed financial models, assumptions behind a cable spin-off, and proof that Netflix deal is actually better. Their argument from Paramount is pretty simple. Shareholders don't have enough information to judge the deals properly before Netflix tender deadline later this month. Paramount is also preparing for a proxy fight, aiming to replace board members and force a shareholder vote. And as for Warner Brothers, the response is that they call the lawsuit meritless. And if we take a look at Polymarket, the result is quite interesting. So here we have a pool who will close Warner Brothers acquisition, and it's going to end in June 2027. Right now, of course, Netflix is sitting at number one with leading with 59% of poll. Paramount is sitting at 28% of poll. So behind the scenes, large institution holders like Vanguard and BlackRock, who's actually controlling most of the Warner Brothers shares, they get to decide the outcome. Politically, this is getting louder as well. Donald Trump, so let's go back to the tweet. Donald Trump has publicly criticized the Netflix deal, hinting that the DOJ may step in as an antitrust grounds. That adds another layer of uncertainty of the deal. So the key takeaway of this news, like this fight, let's go back to the news. So this fight, tells us something bigger about the media industry. The streaming wars are ending and consolidation is taking over. If Netflix wins, it would absorb another major studio and strengthen its content dominance, maybe even leave Disney as the only true peer. If the deal gets blocked, the entire industry faces delays, costs would rise, and uncertainty drag on for years. For Warner Brothers, the choice is clear, like less cash but more uncertainty, or maybe uh, more cash but with much higher risk. Right now, they're betting on Netflix, and this story is far from over. It could reshape Hollywood for the next decade. And we're going to take a short break for now. Coming back, we're also going to dive into the details of Clarity Act because it's just got delayed. And so far, Bitcoin's price have been reacting quite calmly or maybe even possibly about that. So stay with us and we're going to come back with more news.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, his family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin! Come on, little buddy! Bitcoin! I need you! Don't go!
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alright guys, welcome back to Roxom TV and thanks for sticking around. Right now we're diving into the update of the Clarity Act. The Clarity Act is supposed to be the bill that finally tells the crypto industry who regulates what in the United States. And right now it's moving, but at an extremely slow pace and slower than expected. So what the Clarity Act actually is, it actually formally called the Digital Asset Market Clarity Act, is a bipartisan bill designed to end years of confusion around crypto regulation. At the center of the problem is this question: are crypto assets securities or are they commodities? The bill's core idea is pretty simple. Most major crypto assets like Bitcoin, like Ethereum, will be treated as commodities. That it basically puts them under the CFTC hood. Tokens that clearly look like security will stay under the SEC. It also includes rules for stablecoins, DeFi platforms, developer protections, and clear market structure. So the goal is clarity, not enforcement by a lawsuit. But what actually just happened is that this bill, okay, it's not starting from zero. In July 2025, the House passed the Clarity Act with a strong bipartisan support. That was a big deal, especially after years of the SEC lawsuits against companies like Coinbase and Ripple. After that, the bill moved to the Senate, and that's where things slowed down. In the Senate, the bill is split into two committees, so Banking Committee and Agriculture Committee. That means two separate markups, two negotiations, and then combining everything into one bill. So far, the details have proven harder than expected. So why people are talking about delays? Delays are sparkling on crypto Twitter right now. So a key Senate Banking Committee markup, like originally expected in mid-January, was quietly pushed back to later this month. This does not kill the bill, but it does push it closer to midterm election season, and that timing will change everything. The reason why for the slowdown, there are big few forces at work right now. First is the stablecoin politics. Some lawmakers want to block stablecoins from paying interest, which protects traditional banks' deposit businesses. Crypto advocates see this as banks lobbying to limit competition. The second reason for the slowdown is the lobbying pressure. TradFi groups are very active behind the scenes, pushing amendments that water down parts of the bill. And third reason is, of course, the midterm elections. As we get closer to November 2026, crypto becomes very political. Some Democrats are taking a tougher stance on crypto to avoid being linked to scams or market blow-ups. That makes bipartisan compromise much harder right now. So did crypto miss the best window? Some are asking. Well, many in the industry do think so. The delays we experience have pushed the bill deeper into election season. Some even say if this slips past the midterms, it might not come back until 2027 or maybe even later. But surprisingly, how Bitcoin is reacting, especially when it comes to yesterday's price action, Bitcoin rallied to 96K at 96K as we were doing the technical analysis in the beginning of the show. But altcoins are DeFi and DeFi tokens are more sensitive. They rely heavily on regulatory clarity, especially in the US. So the longer this drags on, the more uneven the impact becomes. So the key takeaway for this news: the Clarity Act is not dead, but it's no longer on a fast track. this bill is the foundation for institutional adoption, DeFi growth, stablecoin expansion, and keeping crypto innovation inside the US. Every delay raises the risk that politics wins over policy. So the question now is simple. Does Congress move before midterms, or does crypto regulation get kicked down the road yet again? Of course, we'll keep tracking this closely because these bills would shape the next decade of crypto in America. Let's move on to some light-hearted news that we've got. So the name Satoshi Nakamoto just showed up at the the Golden Globes, not in a speech, but in a crypto, not in a crypto ad, but like in a fashion jacket. If we zoom closer to the picture, so Satoshi Nakamoto, that's the jacket, and that impressed everyone, especially the Bitcoin community. So yesterday, after winning Best Supporting Actress at the 2026 Golden Globe Awards, singer or actor Teyana Taylor turned heads again at the after parties, not just for her gown, but for the graffiti-style coat she layered on top, printed very clearly on the jacket, like with the word Satoshi Nakamoto. So why this caught everyone's attention? Like in fashion circles, the code immediately went viral, but in the Bitcoin world, it set off a very different conversation. Satoshi Nakamoto, of course, is the anonymous creator of Bitcoin, a name that's become a symbol of decentralization, rebellion, and financial independence. Seeing that name at one of Hollywood's biggest nights instantly raise eyebrows. Now, to be clear, Teyana Taylor has not said anything publicly about the jacket. She hasn't explained the meaning. She hasn't confirmed any personal view on Bitcoin. So at this point, there's no official message behind it. And for whether it's fashion statement or cultural signal, fashion watchers say the jacket may be from a niche streetwear label that uses the name Satoshi Nakamoto, tapping into the mystery and myth around Bitcoin's creator. There's no official confirmation from a designer so far, so that leaves us with a few possibilities. It could be a pure fashion choice, a stylist creative decision, or a subtle nod to internet and financial culture. Whatever the intention it was, the result is the same. So Bitcoin culture just crossed paths with mainstream celebrity fashion yet again. It is a cultural symbol, even for people who may not hold it. For now, this remains one of the most talked about after party looks for the season. And whether intentional or not, Satoshi Nakamoto just made a surprise appearance in Hollywood. So we'll see how that culture cross. Right, we will take a short break for now, and coming right up, we also have a special guest from Australia sharing his views on the whole crypto scene in Australia, and also what a crypto broker would do. Why do we need a crypto broker in the first place? So stay with us. We'll see you in a bit.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
Oh, bitch.
So,
Hey,
tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxom, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxom, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back to Roxom TV, and thanks for staying with us. So, joining me today is Jim from Caleb and Brown, a crypto brokerage that works very differently from the typical exchange model. Today, we are going to dig into why someone might choose a crypto broker in the first place. Is this the only for institutions choice or family office, or does it actually make sense for everyday investor as well? What are the real benefits compared to doing everything yourself on an exchange? So we'll also get Jim's own market view, where he thinks crypto could be heading from here, and how investors are positioning right now. And of course, the big question everyone keeps asking, are we finally going to see the alt season in 2026? And that market has been waiting for. So, Jim, welcome to the show.
Caleb Brown and everything to do with the crypto markets.
It's great to have you, and it has been a while since the last time we were talking and caught up with you. So, how has things been overall?
Things have been good. I mean, the last couple of months have obviously been quite choppy and sideways in the market themselves, but there's always plenty of work to do on our end. We're got a lot of exciting things on, from a new mobile app to our expansion into the US, and just to the general day-to-day working with clients. So a lot of things happening on our end, but yeah, looking at my own portfolio would be nice, but looked a little better than what it does currently. But you know, there's still optimism for hopefully a run in 2026.
Yeah, congratulations on the whole expansion in the US market as well. So, since we haven't talked in a while, this is actually your first time joining Roxom TV doing an interview with you. We have done an interview on my personal channel, so Jam Jam Crypto, but this is your first time joining Roxom TV and doing this interview. So, how about we take a step back and maybe do a quick intro about yourself? How did you get into crypto and what led you to Caleb and Brown?
Yeah, sure. So my crypto journey started back in 2017, which is a long time ago now. And it really got started because I was studying the law degree at the time and was actually studying contract law as a subject. And one of my friends brought me onto Ethereum, and I was just fascinated by smart contract functionality, how you could execute contracts via code. And from there, learn a bit more about blockchain technology. Initially, wasn't quite understanding of what it all was, but it all started to make sense once I understood the smart contract layer element to it. And then from there, look, invested through a few friends, and ever since then, I've been super passionate about this space. So I was a bit more of a unique way where I learned about Ethereum first, and then went back and then learned about Bitcoin. And I still remember the night that I purchased and was off Coinbase, and I think the only assets you could buy at that time were Bitcoin, Ethereum, and Litecoin. So obviously the world has changed quite a lot since then, but that was my first real introduction. And ever since then, I've been super passionate about this space. Have very much followed all the different trends and narratives, have ridden the highs of a lot of bull markets, and also seen a lot of lows in some of the bears as well. So that was really my journey into crypto. And then in terms of Caleb and Brown, I've been in this business now for just under 2 years. And I was initially working at Accenture, which was a management consulting firm, starting to dab a little bit. They were looking into digital assets and what they were called the metaverse. But really, after a period of time, I realized, you know what, this is something that I actually want to focus on in my profession and career, and work for a business that does this sort of day to day. So worked at Caleb and Brown for the last couple of years, and just absolutely love working with our clients day to day, and genuinely helping people onboard into this great asset class. So yeah, that's a little bit about me and my history into crypto.
Yeah, awesome. And since you have been in crypto back in 2017, you are actually a lot more OG than a lot of viewers of this channel and also in Roxom TV. So since that you have been with Caleb and Brown and dealing with your clients on a day-to-day basis, I wonder, after years in industry, what is the one misconception people still get wrong about crypto investing? You have to consistently guide your clients about, okay, maybe this is not true, but this is actually what's going on instead.
Yeah, something we try and really educate our clients, especially ones that are quite new to this space, is that, look, it's not a get rich quick scheme. A lot of the time, it's actually about investing in value products, and projects. And actually having a clear understanding around how do I build out my net worth in this space. It's obviously very different to say the equity markets and what have you in terms of its volatility, but also its wide scope of things that you can purchase, right? As I said, back in 2017, there was not that many assets that you could purchase. Whereas today, there's upwards of 10,000, 20,000 tokens getting created every single day. So there's a lot more noise. But I think the misconception, and it's, there are exceptions, obviously. We've seen a lot of meme coins and other assets really increase in price in a short period of time. But it's really about educating our clients around, hey, for a lot of the assets in this space, yes, it can increase quite quickly, but it may not happen overnight. And it's important to have an understanding of how this asset class works. It's still very much a risk-on asset. So if you're looking to get rich quickly, often that means that there's a lot of risk associated with that as well. And we've seen that in the past with many meme coins that can say go up 20, 30% a day, but then all of a sudden they could lose all their value overnight. So I think that's still something that is a bit of a misconception for especially new people coming to this space. But look, we work with clients that are crypto OGs, seasoned investors. Some joined us at the start of the last bull run, have done very well and have become more informed about the market. But certainly for newcomers, I think sometimes that's something that we try to drill into our clients around. This is becoming a more mature industry. And when that happens, it means the rate of returns and the speed of those returns becomes more like the traditional finance space. It's not exactly like that, but that's something we try and teach our clients day to day.
Yes, I agree with you. Like when I talk with my relatives, like the first misconception that they ask me is that, okay, you must be like doing really well or really bad, like when the market goes up or goes down. That is the misconception that I get. And all the meme coins, like even if you close your eyes and then you choose a random meme coin, going to generate 100x. That is the misconception that I got personally. But like speaking of like this cycle, I would say, is really weird. We were longing for an alt season, yet all the liquidity flow back to Bitcoin. So I wonder, like, what is the pitch that you give to your clients? Because like a crypto broker, usually for our viewers out there, it sounds very like it's far away and something that we don't encounter on a day-to-day basis. It's not something like Binance or Coinbase. So how do you explain to the viewers like how the brokerage model work in more simple terms?
Yeah, it's a great point. And look, it is a very unique business. And I'm not just saying that because I work here. I genuinely didn't, as I said, I've been in this space for quite a while and I've usually worked and when I've been my own sort of investor, done everything through either centralized exchanges or through DeFi protocols. So the brokerage model is quite unique and it's something that not a lot of companies can do at our scale. So the real main difference is that, look, everyone that signs up and decides to work with Calvin Brown can really do all the same functionality they can do on exchange. They can buy assets, they can sell them, they can hold fiat currency with us and then decide when they want to enter the market. They can swap one for one between different assets. So a lot of the same things you can do on the exchange, you can do with Calvin Brown. The key difference is that you actually get a dedicated resource and this broker is there to help you throughout your entire crypto journey. So as I mentioned before, we help educate our clients. So a lot of the time we'll inform them what's happening in the market, what are the key trends to look at, not just from a crypto perspective, but also the macro environment and also what's happening at a geopolitical level, because all these things impact a risk on asset like crypto. So we really help hold the hand of our clients throughout the process. And look, I love exchanges, but the one thing that I don't think they do very well is customer support. So if I wanted to speak to someone about my own specific portfolio, there is no one to speak to about that. And so that's the key difference. We'll actually speak to our clients about their portfolio, help them consider diversification options, help them set up exit strategies and profit-taking strategies. So we very much hold the client's hand through the process. And it's one of those businesses that is very much a relationship-driven business. We have clients that have been with us for 5 or 6 years. They know their broker, both in a professional manner, but a lot of the time they've also met them face to face. So it's a bit more of a personalized white glove service, which really back in the day, that's what stockbrokers were doing with their clients. And we've just decided to bring that into crypto and it's something that actually has resonated quite well. So we think this is something that is here to stay. Especially given that we see a lot of new people come into this space and they try and they try and buy assets on exchange. Firstly, they may have difficulty doing that because they're not always the easiest platforms to use, but then they don't really know where to custody them, or they don't really know how long to hold assets, or they just don't really know what to do day to day. So that's where we really help with our clients, and we've found that there's a lot of value in that in the market.
Okay, going back to what you said, like the holding your clients' hands bit by bit to guide them during the trading journey. So I wonder if you only hold the client's hand of institutions or family office, or majority of your clients are retails as well?
Yeah, it's a great question. So we try and provide a service that's institutional-like. So an example to give with that is, look, we are different from an exchange in that we allow clients to custody with us, but it's not just like it sits on an exchange. And we've seen in the past with some of these exchanges like FTX, they're trading your assets on. We actually allow clients to custody with us through a cold storage, institutional grade level custody solution. So that's through Fireblocks. The way that we leverage liquidity for clients is institutional-like as well. So we use OTC desks. We use a range of liquidity partners to ensure that clients are getting the best rates for any trades that they do. But certainly we do work with a lot of institutions and large-scale entities. But we also work with a lot of retail as well. And so that's something that we've really as a business stressed and is one of our mantras, is that we want to provide this service and provide it to be accessible for all. So whether you're someone that's just getting started and maybe you're only throwing a couple hundred or a couple $1,000 into it, that's fine. We still allow you to use our service. But certainly we work with a lot of high net worth individuals as well, and institutions. So we've tried to make the service accessible for all, but certainly it provides its value both for an individual client that can onboard their LLC, or maybe they want to trade via a trust. But we certainly work with a lot of institutions as well that either want to use our institutional cold storage solution, or maybe they don't want to incur the spread and slippages that they sometimes suffer on these exchanges. And with us, they want to go through an OTC desk and do it that way. So it really just depends on what works best. But sometimes our clients will use the service for one manner, and some will use it for a completely different manner. It just depends on how they get their most value out of Caleb Brown.
Caleb and Brown recently did a strategic expansion to the US as well, the US market, and completed a major acquisition, as you mentioned in the beginning of the interview. So, what does that actually unlock for clients in 2026, in your opinion?
Yeah, so as you can probably tell by my accent, I probably should have stated this, is that Caleb Brown was headquartered in Melbourne, Australia. So it was started by a few Australians, and that's really where the business has grown. But even though we're headquartered in Australia, we've pretty much been a US business kind of since the start. So anywhere from 70 to 80% of our client base is US based. But we haven't really had an office presence there until mid last year. So we decided, look, our business is all about relationship building. We want an opportunity for our clients to speak to their brokers face to face. And most of our clients, as I said, are in the US. So we decided to open up an office in the Florida area. We've had a number of our Australian team actually move over to the US and are loving their time there. And so we've been able to expand out that office. We plan to run a range of events in the US this year, which is exciting. And with plans to expand even further to different jurisdictions, maybe in the West Coast at some point as well. So it's an exciting time for us as we expand to the US market from more of a physical location perspective. But we've continued to work with our US clients day to day, and that's always really been the case.
Since that you expanded to the US in a more like a physical manner, having an office in Florida. So I wonder, like when you're dealing with clients or institutions, like are they more open in Australia or US, or like are you sensing any cultural difference between these two markets?
Yes. We've done a few events in the US, and there is, I guess, a level of skepticism of any country, I guess, outside of Australia, which is fair enough. But I do also think that, especially in relation to Australians and the US, we get on quite well, and there's a lot of similarities with our cultures. Which has allowed us probably to grow and perform as well as we have in the US market, because there is that level of synergy. But certainly for a lot of US clients, and we can understand it, there is a bit of a level of hesitancy because of our headquarters based in Australia. And that's another reason why we wanted to grow out our physical location within the US, to allow our clients to get that peace of mind. But certainly in terms of cultures, I would say it is quite similar. There are a lot of similarities between the Australians and the Americans. So with that end, it works really well. And has been a reason why we've been able to grow out our US clientele quite significantly.
Yeah, it's very interesting because, like, talking with people from different background, from different countries, I'm sensing like different investing strategy. Some of them may be more degen, some of them may be more conservative. So, I'm asking, like, if the clients in, I don't know, compared to US in Australia, are they more looking at the portfolio in a more long-term manner, or they'd like to short-term trade as well?
Yeah, it would depend on broker to broker. I actually had this discussion with a broker the other day because we have a lot of large XRP holders that are currently kind of figure out what they're trying to do in terms of where we're at in the market. And his observation that he gave is that certainly within the US clientele that he has, they're very much looking at the market day to day. They're setting up limit orders and target orders. They're looking at, hey, do I expand here my portfolio or do I try and diversify? So they're more on the pulse. Whereas he's found, especially with his more high val Australian clients, they're sort of more relaxed and are looking to hold for the longer term. Now, it very much depends on the type of client, right? If you've got a client that is already high net worth in whatever they're doing in their own personal capacity and they're viewing crypto as an alternative asset class just for them to diversify, sometimes you'll find they're a bit more hands off and are just looking and happy to see the asset ride. But it just depends. I would say that there are also a lot of US clients that have high conviction in their assets that they're holding, sometimes to a fault, but a lot of the time they've done really well and they've timed their buys really well. And I think that's something that we always stress with our clients is that at least have some sort of plan in place and have those execution price points there. Whether you actually end up executing on them when the time comes, that's another story. But if you have a plan in place and you have a profit-taking strategy in place, at least sets you up to be prepared for an uptick in the market. But if again, we see regression in the market throughout 2026, you at least have a minimum price that you're willing to sell out of and still take profits. So it probably depends on the broker that you ask. But certainly I think our American clients are certainly on the pulse with their portfolio and what's happening within the crypto markets.
Yeah, I happen to agree with you. Like having a plan in place, it would take you a lot further compared to just like degening into any assets that you see. So one thing both America or Australia or in Hong Kong, like basically everyone in the market is asking right now is like, where is 2026 going? Maybe for crypto. Because what we have seen, especially for the past few months, is that all asset class are going up, like gold, silver, stock market, but not so much for crypto. So what is your personal take for 2026 for crypto? Do you think it's a bull market or bear market?
Yeah, it's a tough question, isn't it? We're certainly in a level of uncertainty right now when it comes to the crypto space, and I think, look, you're right in the sense that if you look at other asset classes, especially say the S&P 500, it continues to perform. We've seen gold hit all-time highs, we've seen silver hit all-time highs, but we haven't seen that altcoin season or really a run. Obviously, Bitcoin hit its all-time high, but it hasn't really performed well since October. And one of the key reasons for that was the mass liquidation event that happened in October. That took out, what was it, about 18, $19 billion worth of funds into the market that would have been, circulating that have now been evaporated through liquidations. And so I think sometimes we probably underestimate. I mean, that's one of the largest liquidation events ever, but that's just so much capital that's now exited the market. And we saw that the market couldn't really recover from that in November and December. A lot of the large institutions that were trading into crypto and are still probably big believers of it, they hit their caps in terms of how much they could lose and their limits, which meant that they probably never actually re-entered the market. So looking into 2026, I think there's still a lot to be bullish about. We have, well, hopefully the Clarity Act will get passed, but we've just seen over the last 24 hours that may get pushed back as well. But I certainly think that there are still catalysts for us to continue to do really well into 2026. It's not the 4-year cycle anymore. I think that's clear. But certainly, I think we need to see Bitcoin probably hit 100K again within the short term. It's obviously, overnight we saw it hit 95. We're starting to see altcoins start to move a little bit as well. And we're starting to get a little bit more uncertainty around where we're at in the economy. We're not quantitative tightening anymore. We've moved into a quantitative easing stance, which is a really important element for risks on assets like crypto. So hopefully we start to see the Fed inject more liquidity into the market. We are starting to see that inflation is steadying, which is really important because we're probably not going to get another rate cut until maybe the middle part of this year. So I think there's reason to be optimistic. It'll not be like what we've seen in other cycles, and we probably should never have expected that considering the institutional adoption we now have in crypto. But again, and I know you might want to talk about this at some point, if we see further geopolitical tensions and the escalation potentially with the US into Iran, that occurs here within the next sort of week. There's not a lot that we can do on that front. And usually we've seen risk on assets to be the first thing that's sold off when there's any uncertainty in the market. So I do think we have a lot of catalysts to look forward to moving into 2026, but we are very much in a level of uncertainty right now. And as you said, it's a bit of a weird moment because other assets are doing really well, but crypto hasn't really followed suit yet at this stage. So I definitely think we're in a wait and see. And I think we're starting to see that, with our clients, we're a bit of a microcosm of the entire market. And certainly right now, our clients are almost sidelined, just trying to see and wait to see what happens. But I'd love to get your take on where you think we're at and where you think we're headed in 2026 as well.
Well, personally, I know you mentioned that the 4-year cycle is not intact. Well, I think it's very much intact because we did see a cycle top on 6th of October. So what I personally think is that, okay, history doesn't repeat, but it's rhyming. It looks like it's following any previous cycles, the 3 cycles that we have got on the data point. But like going back to the geopolitics side, you mentioned Venezuela, you mentioned Iran, and right now it is quite weird for crypto because crypto is going nowhere. It's actually going down if we compare that to gold. So this is a question I got a lot from my friends or relatives who are not in crypto. Like, you might as well just invest into gold and get some sleep at night. Like, do you agree or disagree with that statement? Like, investing in gold right now is a no-brainer.
Well, I think right now, if you invest in gold, it's around its all-time highs, right? So it's more of a perspective of, do you think it's going to continue to rise? Certainly, gold has done well because when we are fearful in the market, people flock to safe haven assets, and it's clear that gold is kind of the pinnacle for that. Now, people would come back and say, "Well, I view Bitcoin as the digital version of gold," but we haven't really seen the market think like that. We still view Bitcoin as a high risk beta play. But I personally still think that gold, given I think it's important to have diversification, right? I think owning some gold is great because in these periods of uncertainty and, as you said, geopolitical tensions increasing, people will flock to gold and want to hold that as the asset. But I still think Bitcoin is still a very strong investment. As I said, it's past that 95K mark, which is a really important resistance point for Bitcoin. And I still view it, given its capped supply, given, I still think it's a digital version of gold, that it's still a great asset to hold, especially over sort of the next 5 to 10 years. Whether that means it's a good timeline to buy within the next 6 months, that's very much dependent on where you think we're at in the market. If you think we're going to go into a bear market, which will come at some point, but whether that comes later part of this year, in the next couple of months, we don't really know. But what I'm trying to say is that long term, over sort of a 5-10 year horizon, I think Bitcoin has proven, since we spoke about in 2017, it's been the best asset you could have purchased in the space. So I still think long term, I'm a big believer, and as a business, we are. But whether it's going to perform well or outperform gold within the next 6 months, that's a little trickier to estimate because it is very much dependent on a range of factors, like what's happening at a global level. So, yeah, that's my viewpoint on it.
Yeah, one thing very interesting about Bitcoin is that, as you said, it's supposed to be so-called digital gold, but that narrative is flipping so often. Like when the price goes up, people say, okay, it's digital gold. When it goes down, it's okay, it's a volatile asset, it's risk-on asset after all. Because one thing interesting about geopolitics is that back in the invasion of Ukraine, like when Ukraine being invaded, we saw Bitcoin went down a little bit, and then we know the rest is history. Like Bitcoin keep breaking new all-time high ever since 2022, the bear market. So I wonder what is the like. Do you think there's a strong correlation between politics and markets after all, or do you think like what we witnessed in the past, especially 3 months? Bitcoin deviated from the traditional market, from gold and silver so much that we no longer had that correlation when we do the analysis.
Yeah, it's a good question, and you're right that I remember sort of when the Ukraine war was announced, and we definitely saw a downward pressure in the market. But Bitcoin's been super resilient, as you mentioned, and usually there's almost like a sell, immediate event when the news comes out, but then almost overnight or within the week, it's regained all those losses. So it is interesting. I do think long term, especially as more institutions start to hold it, more governments are starting to hold it within their treasury, that we will see less volatility with Bitcoin. And over the long term, it'll actually probably become more like gold, where it's seen as more of a safe haven asset, but it doesn't have that level of volatility. I just don't think we're there yet. There's still so much more supply to come out. There's still a lot of people that are selling their Bitcoin, and that's something that's been quite interesting recently. And it's probably part of another reason why we haven't performed too well and seen that altcoin season, is that a lot of OG Bitcoin holders, like I'm talking 2011, 2012, a lot of them, once we got to the 100K mark, actually started to sell their Bitcoin. We saw a lot of dormant wallets start to sell out of their positions, and these are very large positions. And so that forced a lot of sell pressure into the market. And so I think you're still seeing a lot of volatility come from the retail side of things. And a lot of the supply still held up with really large whales that were very much right in their conviction, but are ultimately not looking to probably maybe hold long term or looking to make a profit. So I think, and again, I don't know if Bitcoin Maxis is going to necessarily like this point, but the fact that we're starting to see more institutions start to hold it and have belief in it, I think over the long term, we will see more of a correlation to sort of how price moves with, say, gold, and how gold is seen as that safe haven asset. But I just still don't think we're there yet. We'd love to talk about all the advancements we've seen in crypto, and especially in relation to support for Bitcoin. But it wasn't that long ago that the current US administration was very anti-crypto. And in fact, the SEC were coming after every kind of institution within the crypto space. So I still think we've got a long way to go. And there's a level of maturity with this asset class that is still yet to come. But ultimately, that's why a lot of people are interested and love Bitcoin and crypto in general, is that it's way more volatile, and it means the returns are a lot more juicier when the market's going well, than compared to some other asset classes. So I think long term we'll get there. I still think in the short term, and as you said, we've seen it time and time again, it's still probably seen as more of a risk on asset.
Yes, I mean, this cycle is very interesting because what it showcases that all liquidity eventually goes back to Bitcoin. And we have been waiting for an alt season ever since late 2021 or early 2022, but like we still haven't seen that. I actually personally watch a lot of crypto YouTube content, and basically all the YouTubers are screaming out alt season, and yet waiting for a few years and we still don't get that. And we see crypto narratives flip so changing so much because like we have seen meme coin mania or AI agents, but those are very short-lived. So arguably maybe like in 2024 we have seen a very short-lived, extremely short-lived alt season, but like that narratives didn't exist for longer than 3 weeks. So investing in this market is extremely difficult. Like on a personal level, are you watching any narratives? Maybe it excites you right now, or you're just like sitting on the sideline waiting for the dust to settle. Let's see how the geopolitics plays out first.
Yeah, you're exactly right in that. Look, we haven't had that sort of euphoric altcoin season, and what we've seen, especially within the altcoin space, is it's very narrative driven. So you mentioned the meme coin AI agent narrative that was around this time or a couple of months. I think it was around March last year. I know that this time last year was the ISO token narrative. So we saw XRP have a sudden surge along with XLM and a few others. We also had that meme coin mania phase. We've had an RWA phase as of recently, and I think the narrative now is privacy coin. So Monero has really shot up in terms of its price. I think it's past or near its all-time high around $700 now, and that's due to a range of new laws that have been brought in within Europe that are essentially banning these privacy tokens. But also, it's limiting liquidity as a lot of the majors aren't listing it. So you're exactly right. I think anytime with altcoins, when we start to see these trends of it go from one narrative to the next, it's really hard to time that. And that's where a lot of investors get burned because they try and chase one narrative from the next. And I can speak directly from personal experience. I've done this back in 2021. You mentioned AI agents. I was fully invested in it. I still think long term there is a great intersectional sort of intersectional grouping together of AI and blockchain. But certainly, I don't think we're there yet. And that AI agent craze sort of emphasized that, and that not a lot of value came from it. So for us and for me personally, I've definitely shifted my perspective. As I mentioned from the start, I was kind of like an ETH maxi. I used to never hold any Bitcoin. Now my investment thesis, and this is probably a good lesson for anyone on this call, is that you should always be open to changing that thesis. And so for me, I'm looking to stack Bitcoins long term. I still have a belief in Ethereum, but as you said, it's really hard to be an altcoin investor. Over the last 4 years, Bitcoin's outperformed all altcoins in the space for the last 4 years. So it's really hard to time, okay, privacy tokens have got their their day in the sun right now, but it doesn't necessarily mean they'll have that in a couple months' time. So I think for our clients, it's always about if you are going to invest in crypto, at least have an allocation to Bitcoin because it's just the best performing asset. And I think long term it has the best staying power. And then have a bit more of a thesis around, okay, if I'm going to invest in altcoins, do I invest in a project that is cash flow positive? What are the tokenomics of it? So like how much supply is still to come into the market? Because that's something that often gets overlooked. And also, is it profit taking or are they buying their token back? Is there a clear use case for the protocol and what they're doing? Is there usage of it as well? And so that's something we've seen with a lot of airdrops recently in the altcoin space that people just dump them instantly. And after 3 or 4 months, no one's actually using the protocol or the blockchain. So all of those things are really important. And that's something that we speak with our clients about is, okay, what's your conviction in this asset? Here are the growth levers and here are the catalysts long term. But for me, look, I'm so far in deep in crypto right now, and I'm one of those individuals that thought we'd have an altcoin season by now. So I'm still bag holding, so I'm not necessarily adding to my position at this stage, but I'm still relatively hopeful that maybe we get some sort of run here in 2026.
Personally, I'm actually shorting altcoins, and so far, because I've been doing that
You've probably
for
been doing very well then.
yeah, I mean, I'm not complaining. But like what I learned is that all roads lead to Bitcoin. Like if I'm using a long-term mentality when it comes to investing, then Bitcoin is a no-brainer. But if I'm trading short-term, looking for a quick buck, then I don't know, like shorting altcoins, it seems like the most sensible for me right now. So that's what I'm doing. But anyways, we're coming to the end of the interview. So looking ahead, like what do we hope? What can we hope from Caleb and Brown, and what does it look like by the end of 2026?
Yeah, I mean, look, for us, we're at this stage, we're purely just a spot service. So we allow clients to buy and sell assets. We list around 250, probably closer to 300, but it's purely just spot trading. So we don't have anything like yield generation, like staking, lending against your assets, borrowing. It's something that we've never really had that much demand from our clients for, but as of recently, it's just probably been something that's come to the light a bit more, and we're starting to see a lot more positive developments, especially with some assets that aren't necessarily natively staked. So for us, we're looking into providing those potential solutions for clients, but the way that we do things is we're pretty slow and steady, and we like to do our due diligence. And if we're going to build new products like that, we want to make sure it doesn't come at the expense or the compromise of our client assets, or it doesn't impact our ability to still custody assets in cold storage. So look, there's no timeline on that, but that's certainly something that we're looking at in terms of innovating as a business. And then in terms of just our service, look, we're always looking to tweak it and make it better. But ultimately, look, we're a 24/7 crypto business that you can actually call and speak to someone about you and your direct portfolio. And that's something that is quite rare to the space. So as our clientele continues to grow, we look to continue to grow and expand, but ensure that that personalized service remains the same. So, regardless of whatever happens this year in crypto, our clients know that they can always come to us. And I think that's the best thing about it, is that we're always going to be here, whether it's a bull market or a bear market. This business has gone through both of those. And so we definitely know how that works with clients. And often at times, look, we all kind of dread the bear market, but for a lot of our clients, that's where they've made the most gains, because they've had the conviction in certain assets. They've stacked Bitcoins when they've been at a bit more of a lower price, and now they're starting to see the benefits of that. So a lot of our clients are still very active in a bear market, probably not as active as we'd like. But certainly, look, we're going to continue to grow and build out our service and continue to provide value for our clients.
Yes, I love that. So, Jim, if our viewers want to basically get to know more about your own perspectives on the market, where's the best way to reach out to you?
Yeah, so the best way to reach out is either via email or my Twitter. So my Twitter handle is Jimmy_Baz, and you can reach out to me there. Conversely, you can also email me at jim@calebandbrown.com, calebandbrown.com. And if you're interested in working with us, please let me know, and I'd be happy to answer any questions you may have. But yeah, I mean, I'd love to come on and do another one of these at some point if the community is interested. But yeah, love chatting about the markets with you, Jamie, and thanks for having me on.
Yeah, thanks for joining us. So all the links can be found in the description box below, including Caleb and Brown. So thank you so much, Jim. I hope to have you on in our next show as well. So coming right up, we also have more show lined up on Roxom TV, and so stay with us.
Security matters. Zappo Bank. The only